from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today, I'm very pleased. Joining me, co-founder and CTO of Brigit, Hamel Kothari. Hamel, thank you very much for being with me here on the show today. The way I love to do it is I keep it to my guests to introduce themselves to us. Tell me a little bit about, your journey, your experience, and what you are currently up to with Brigit.
Yeah, absolutely. Thank you for having me. So my background, I started my career in tech a little over a decade ago, actually at Palantir, where I was very lucky to get sort of my first exposure to cash flow data, people's bank transactions, which is at the heart of what I work with today. It was a really interesting time for me to be there. After that, spent a couple of years working at various financial services companies here in New York before I started to have that itch that a lot of people in tech have to start my own thing. But I was really adamant about if I was going to start my own company, it was going to be something that I felt really good about coming into work on every day, something where, I also felt like there was a real business to be had, but it had to be both of those things. And so I was very lucky to have gotten introduced to my co-founder, Zubin, who's our CEO, through a former colleague of mine. And through that process, in talking with him, we started to talk about the power of cash flow data, of people's bank transactions, and how that was becoming readily available when we got started in 2017, and realized that there was a real opportunity here in the US to use that really rich data that was becoming available to get people access to the financial services that they needed in a way that historically they hadn't been able to get access to. And so that's where the idea of Brigit kind of came to be, was when we started looking at the numbers here in the US and understanding the sort of financial health of most people in the US, we realized, wow, there's 100+ million Americans living paycheck to paycheck. Actually, now in 2024, that number is closer to 150 million Americans living paycheck to paycheck. It's a number that's been growing, unfortunately, due to the macroeconomic climate. And so we realized we could look at people's cash flow data through data aggregators like Plaid and others that were coming into being, and use modern sort of machine learning and AI technologies to understand their risk and get them access to the services that they need. Whereas if you just judge them on their credit score, maybe you wouldn't have been able to get access to those services. And so that was sort of the sort of genesis of what we came together to do. Was we saw this massive problem of financial stress, this availability of new, really rich data. Interestingly enough, a piece of data that I had gotten a little bit of exposure to in a prior part of my life. And so it was sort of all of those things coming together, where we realized there was a real opportunity, and an opportunity that hit both of those two tenets that I was looking for: a real viable business to be had, especially when you see that Americans are spending billions of dollars in overdraft fees. This is a viable alternative to help with that. But also one that, you're helping people who are struggling financially. So one that I could feel really good about. And so that's kind of the journey as it brought us to coming together. And so today, what we do here at Brigit is we solve basically short-term financial stress and help people get on the path to better financial wellness through a financial health app that we provide to our customers. We'll help them avoid things like overdrafts, budget better, build up savings and build up their credit history, and help them find opportunities to save on things that they're already spending on, all through sort of our holistic app. So that's what Brigit does today.
Great. And thank you again, Hamel, for being here with me today. Being in, the finance, or like, let's call it the broader, anything related to money, is not an easy thing, especially, from, technology perspective. So anything special, coming from, you are the CTO, right? So you come from the technical background. Anything why, have you decided to go with this vertical specifically rather than maybe, I don't know, like plenty of other options out there. So what attracted you to this domain, I would say?
Yeah, I think I was maybe a little foolish coming into it, that I thought it would be a lot easier than it actually was in practice. As you said, financial services, fintech, there's a lot of barriers to entry, both ones that are visible, but also ones that are not really visible. So for example, compliance is a huge barrier to entry that once you start working on it, you realize, oh, there's so many boxes that need to get checked, so many things that need to get taken care of. The number of partners to launch any sort of product is very high. And so there's a lot of sort of partnerships you have to get in place before you can even test something with your first customer. And so there was a lot of barriers to entry when we got started that maybe I was a little more naive to. My co-founder, thankfully, had a lot of the insights that he kind of knew what he was getting into. So part of it was a bit of naivete that I didn't realize how hard it was going to be. But the other part of it, as I said, was it was very rare. I talked to a lot of other sort of entrepreneurs before I got started on this, and it was very rare for me to find an opportunity where there was going to be a definitively sort of viable business. And for me, the metric that stood out to me with the idea of Brigit was that Americans were already spending billions and billions of dollars in overdraft fees. I think when we started, the numbers were around $34 billion in overdrafts being spent every year. When we looked at the sort of finances of some of our customers, we were seeing that these were people making $40,000, $50,000 a year, spending $1,000 in overdrafts. So they were already spending money to get access to a service that we thought we could build more cheaply. And they were spending a lot of it. So we knew that there was an opportunity for people to have a willingness to pay, but also they were spending so much on it today, or when we started, that we realized that there was a huge opportunity to also deliver value back to them. So we could feel really good about building a business that was helping people because it was essentially putting more money back into their pockets where they were already spending on fees. We would be able to provide it at a lot cheaper. And so those two things, when you put them together, you have a business that, definitively you think you can make profitable and sustainable, but also one that every day I got to come in and feel like, this was it. When it was going to be hard, I knew that there was a customer on the other side who would really value the service. That made it a no-brainer to start. Whatever barriers to entry, we'll sort of tough through, because I talked to enough people to know that very rarely do you find both of those things.
Right. So, like finding that you have a product market fit, I don't think it took you so much time to get it. And, the problem, because, this is kind of a global podcast, of course, funny enough, I'm based in Dubai. Majority of my audience are in the US. So I'm 100% sure that, they get what, the problem you just mentioned. But it's a kind of a universal problem, people, living on paycheck to paychecks. Now, if I want to, go and understand the way you help people to manage, their finances and, to avoid, paying the fees you just mentioned. So if you can explain me like a little bit the technology behind it, and at the same time, because I know that you had some fantastic growth also as well, and adoption for your solution, which like also like was very obvious in your revenues and so on. So like if you can walk us through, Hamel, like a little bit about how the technology exactly works and how you were able also to make sure that it scales with the demand, saying that majority of the people in the US, they are having, this common problem.
Yeah, I'll sort of start first from the customer's perspective and talk about what the products are, and then sort of flip back to how we power it on the other side. But when we first got started, the first problem we were really looking at for our customers was overdrafts. They were overdrafting frequently, which means they were going negative on their bank account, and their bank was fulfilling the charges, but they were getting hit with a $34 fee for every transaction that they made. And so that's how those fees really piled up. And so when we looked at this, we realized, hey, these are individuals who are living within their means. They're not sort of spending more than they're making. But because of the way that pay schedules work in the US, they're subjected to a timing mismatch. My bills are due today. My paycheck's a few days away. I know I'm going to be good for it. The funds are coming. I can see it in my payroll account, but I don't have it in my bank account, which means I can't pay my bills. That's why they're overdrafting. And so our first product, which we call Instant Cash, was essentially to solve that problem. Sign up with us. You'll link your bank account. So we'll use a data aggregator. And in our case, we use Plaid to connect to your bank account and get access to your bank transactions. And then using those bank transactions will understand you, understand how much you've earned, understand your overall sort of risk, and make sure that, yeah, this is someone who's living within their means, but they are subjected to that timing mismatch. And then we'll essentially advance them anywhere from $50 to $250 at any point in the month that they need it to be able to pay those bills. So instead of going into overdraft and going negative and paying $34, you sign up for a monthly subscription for less than $10 a month. You'll have the funds that you need to pay those bills. So it's cheaper than your first overdraft. And for most of our customers, they were spending multiple overdraft fees in a month. And so it's substantially cheaper than what they were doing before. And so that was kind of the first product that we had. And then over time, as our customer base grew, because again, as you mentioned, people were already spending a lot of money. That's where I think it was very clear that there was product market fit because it was way cheaper. Word sort of spread and we grew very quickly on that. We also realized, well, that's not the only financial problem they have. They also struggle to stay on top of their finances generally. So we built out some budgeting tools into the app. We realized from looking at their transactions that sometimes they were maybe overspending on things like insurance or on other financial products. And so we built out a marketplace in our app to help them find access to cheaper services to drive down their cost of living. And then, we also realized that a big reason why they were overdrafting or in this challenging situation was because they didn't have access to traditional forms of credit, because in the US, you're judged primarily on your credit score.
Right.
And so what we built out was a product to help them save a little bit every month, but also demonstrate repayment history and build their credit history by using our credit builder product. So that's sort of a savings credit building combination product. And so that's kind of how our suite evolved. And at the heart of it, coming to the technology, as you said, was really the ability to get access to people's cash flow data and then work with that data. And that's not something that's very easy, because if you think about it, every individual, if you look at your bank transactions, you've got thousands of transactions over the past few years. To be able to get interesting insights out of that with a scale of millions and millions of users, you need to be able to sort of have the technological skills to be able to analyze that stuff in real time, to be able to build sophisticated machine learning and AI models on top of that, to be able to understand credit risk in a way that you can sort of predict whether someone's going to be able to sort of pay back the funds that you advance them. And so that's kind of the technology platform that we essentially built, was this platform that takes in people's bank transactions, derives a ton of different really valuable insights for a bunch of different use cases, from underwriting and understanding risk to finding opportunities at the right message and send them the right message at the right time to help them save a little bit of money, or give them a sort of financial piece of content that's going to help them based on their current status and their financial journey. And so the sort of core tech that sits under our product is really a cash flow analytics and automation platform that works off of that transaction data for millions of customers across the US.
Yeah, it would not take a lot for people to guess that, of course, because you're collecting a lot of data that you're leveraging AI and machine learning in all this. So, and I know this for a fact, of course, because, I was doing my research. So how, utilizing machine learning and AI allows also to offer things that maybe traditional lenders, they don't do, and how it makes also, probably from, I would say, user experience perspective, because we're dealing about, making it money available for them to withdraw or, utilize it or whatever. So this non-friction also, like how much, AI and machine learning make it possible. And, if there's another use cases where you are leveraging today AI and the ML you want to tell us about, that would be great also as well.
Yeah, at the heart of it, I think that the most important thing that we want to do really well is make sure that every customer has access to the funds that they need to be able to spend without stressing, right? And so the first and foremost, this isn't the only use case, but the area where we spend the most of our time is really being able to understand risk and predict whether or not someone's going to be able to pay that back, so that we can approve as many customers as possible. You can really mitigate your risk in a business that advances funds by just not advancing to anybody, but then, people don't get access to your product, and that's not a good experience for them, right? So our goal is really to do the best job in underwriting these customers and understanding their financial state, so that we can approve as many people as possible. And that's kind of our bread and butter of where our models really shine the most, is ultimately a lot of people in financial services are building models to understand credit risk. We think we do it exceptionally well. And that's why we're able to underwrite so many customers and get them access to our services with really high approval rates. So that's kind of since day one, that's where we spent the most time, is really doing that. But
Right.
as we got more customers and more data and they were spending more time on our product, it didn't make sense to just stop there. Obviously, that's where we're going to see the best returns. So we're going to spend a lot of time. But we also realized, hey, every single time that you transact, every single time a moment passes in your bank account, you're in a slightly different financial state. And there may be something useful from that data that we can glean to help put you in a better position for the future. And this is where I think we really start to step aside from kind of what other financial services institutions are doing. It's really taking that data and using it at every moment that there's a change to make a prediction about what's going to be useful to you. So it's not just understanding your risk, but it's saying, hey, your electricity bill just came in and it's the winter, and there are repayment programs or payment assistance programs put on by your electricity company. Putting those two things together and using it to send a notification that's actually useful. We may not make any money off of that, but it puts you into a better financial state. And that builds a lot of loyalty for our brand. And so there's all sorts of things where sometimes it's going to be, hey, it looks like you're about to overdraft. Why don't you take an advance? Brigit's got you covered. Sometimes it's going to be looking and saying, hey, your electricity bill is looking a little high. Let's help you find a way to lower that. Sometimes it's, hey, your car insurance is a little bit higher than usual. We've got a partner that's going to help you save money. So looking at that whole financial journey and reacting in every moment that we see a transaction update for every single customer, doing something that's personalized for them, is really what we do well. And I think what very few, if any, sort of other financial services institutions are doing with that really rich data that they're sitting on top of.
So it goes beyond, just providing them the cash when needed. It also tries to predict their cash flow, during the month, and, so they avoid maybe misspending here and there. And maybe it provides them an holistic approach of managing their finances. So and I like, the customization, because of course you collect the information per individual. So this, allows you to customize and personalize. This is a lot. Mentioning this, like, of course, like, financial services are like the most the highly regulated vertical, I would say, along with healthcare, of course. So, like, what are the challenges and the risks, when trying to implement kind of, this AI technology that needs to handle sensitive data for customers? So if you can walk us through and how you overcome them, indeed.
Yeah, I think there are a handful of different constraints that we have to operate under. I think it really depends on every product here in the US, at least, is regulated somewhat differently. And in fact, it's also regulated somewhat differently in every single state. And so you kind of have to be aware of what the corresponding regulations are in each and every state. But largely, the stance that's been taken in the US has been that people's cash flow data, their bank transactions, is their own data that belongs to them, and they're providing it to us to be able to use to provide them value-added services. And so in that way, it helps that this is essentially user permission data that's given to us that we're able to then use to provide them services. And so that sets the stage for, it's a little bit easier to work with this data, actually, frankly, than if it's a credit bureau data, where the credit bureaus are collecting that stuff without your permission, and potentially, you're getting it. There is a higher barrier for you to be able to work with that. So cash flow data, because of its sort of nature, is a little bit easier to work with these days than, for example, things like credit bureau data. But once you sort of have permission to use the data, then it becomes a question of, really, it's a lot more challenging to find a product that you're going to be able to offer to customers that fits within the sort of federal and state regulations. And so for each product, less so to do with the AI models or the machine learning models that you're using to actually underwrite or understand customers. A lot more of what you have to figure out is the structure of the product, the corresponding fees that may or may not be associated with the product, and making sure that that fits within federal and state regulations. And that's where the barriers to entry tend to be. And depending on how that product is structured, you may need to get licenses or registrations in some states. And in some cases, you could have to get 50 of those across 50 states. And so that's where the barrier to entry really exists, is it's less so about using the model to understand the customers and a lot more to do with just what is the product that you're offering. At least historically, that's been the case. There are a few more states now in the US that are getting a lot more attuned to the use of AI models, generally speaking. I think Colorado has a law that has recently been passed with respect to AI models, where I think you need to sort of get certain extra permissions, and usually there are additional disclosures that you're going to have to put forth to customers. But I know California also has a law like this. So there are more and more states that are looking closely with how people are using AI, but a lot of what that manifests for companies like us is going to be increased disclosures to customers. Yes, you're allowing us to use your data to be able to better serve you, things like that. You've probably seen prompts like that on applications that you sign up for. You're going to see a lot more of them over time, I think.
Right. Now, interesting point here, about utilizing the same model. And I'm not sure if you have plans for that, Hamel. So because you have this applied, and I think the US, because I have a lot of friends living there, so I know how the system works. And, to me, like if you apply something to the US, you could apply it like maybe to other countries. So how easy is to port this to other countries? I mean, from technology point of view.
From a technology standpoint, not very hard. I mean, bank transaction data exists in every other country.
Right.
I think our models probably have a lot of broad applicability to other countries in their current form. And even if not in their current form, our features probably are still very applicable. And that means we could train new models in other countries without too much work. But the challenge with financial services, and this is why you don't see many multinational financial services firms,
Right.
regulation. They're only about half of our company here in the US is Brigit is engineering and product. The other half is all of the other operations that are required to support our business. And not all of that will port very well to another country. If we, go to Europe, there are totally different banking laws. There are going to be totally different payment systems sitting under that banking system. There's going to be a different way
Right.
of operating. So our operations teams are also going to look very different. And so there's very little applicability on the rest of the side of the business to other countries. And so we'd have to figure out a lot there. And so for us, we're really focused today on how do we continue to broaden our sort of impact in our customer base here in the US, play to our strengths where we already have the infrastructure and the resources. But I think there is a world in which this could make sense, outside of the US, but we're going to need to be much bigger, I think, to support that.
Right. So if I want to stay in the US, how, or is it applicable to B2B, for example, maybe small, medium businesses? Like, is there such use case also for them? Because I know for a fact that they have all over the world, I'm sure the same in the US, cash flow issues also as well. So would that be a possible use cases in the future, of course?
Yeah, I think when we first got started, we definitely saw a lot of sole proprietors joining our platform early on because um, uh, sole proprietors are a very large population of folks who overdraft frequently. Their cash flow mismatches tend to be slightly larger. They swing more
Right.
frequently, and as you said, it's a very common problem. So we definitely saw a bit of that. I will say it's also substantially easier to work with from a regulatory perspective merchants than it is individuals. The regulations on consumers are much more strict here in the US than they are on small businesses. So there's definitely some opportunity there. I will say a lot of people are serving that market already because it is easier to work with. So, whether it be the Squares of the world, or I guess the Blocks of the world, they offer merchant cash advance products, which I think serve this exact use case. There are a lot of other providers out there that do it. And so for us today, we're really focused on the consumer, with the consumer really being an individual. I think there's some overlap with those sole proprietors. But as that use case becomes more of a business use case, the swings get larger, the frequency of it changes, and the sort of the financials of the business look a little bit different. And so that isn't as much where we tend to focus, but it's a similar problem.
Of course, 100%. Yeah. So it's a common problem, but I can see how it can be applied even in different geographies also as well. So, and to SMBs as well, to individuals. Now, I'm gonna ask you something which is not much technical. It's more like on, I would say, the business side. And again, I'm focusing on the fintech or like financial services. So this sector, more than any other sector, is pretty much, uh, you know, affected, I would say, by the macro and microeconomics, right? So whether that's some crisis in the horizon, some spending habits that change with people, maybe sometime, again, we're maybe repeating some of the points, the regulations that might change. And I know like in the US, these nuances between the states and so on, and how much, you can you can't expect, for example, what would happen. So, but while building, Bridget, and during the operations, so what was your strategy to stay strong, I would say? And of course, because as a leader yourself, Hamel, I know you take care of everything technology, but you need also to make sure that the team, is again understanding, these
Yeah.
dynamics and these changes. So if I want to ask, like, how you make sure, especially in such very volatile, I would say, vertical, which can change with the micros and macros,
Yeah.
can be resilient, and how this maybe also affected your leadership style with the rest of the team.
Yeah, it's a very, very important question for our business because if I kind of tell you the years, we started in 2017. We
Oh,
officially launched the product sort of nationally in the US in 2019. And you can imagine what happened in 2020. So we always, I think when we were starting out, we raised venture capital and we uh, thought a lot about some of these sort of more existential risks for the business, macro being kind of one of those. And one of the things that we always kept in our back pocket that we were confident in was this customer base that we work with, customers who are struggling financially, sometimes referred to as subprime here in the US or, low income populations. When you look at their overall sort of risk levels, they tend to be higher than, someone who is prime or someone who is high income. That's sort of a given. But what you see is actually in periods of crisis, this population tends to fare relatively better than other populations. So than high income populations or otherwise. If you go back to the 2008 financial crisis, you'll see that there's much lower volatility in the risk in this population than there was in sort of high income populations. And the reason for that is their financial lives are already so stressful. They have far more coping mechanisms. They're already, they're already well practiced in dealing with that volatility. So additional volatility getting added to them, it definitely goes up, but it doesn't go up nearly as much as in really high risk populations. So that was something that we sort of knew in our back pocket was if there was going to be some sort of stressful macroeconomic event, our customers would probably, if we can figure out how to support them in the good times, in the bad times, we were probably going to have an easier time than sort of some of the more traditional financial services firms. But that wasn't really proven until I think when 2020 happened, here in the US, we had mass lockdowns. And I think when you look at our customer base, one of the things that you'll see is the largest population of folks who use overdrafts or use our product are people working hourly jobs in retail, food service, hospitality, things that were really, really dramatically affected by COVID. And one of the other things, so obviously that was a huge concern for us when that started to happen was all of a sudden, we're advancing funds to people. What's going to happen? Are these folks going to lose their jobs? What's that going to do to our risk? Are we going to be able to sort of survive this situation? But this is where I think the power of that cash flow data, the bank transaction data really starts to shine again is because we could see not just, okay, this is a person making, $40,000 a year, but this is a person who's making $40,000 a year, where they are working at a coffee shop, or they're working at Disney, or they're working, we could get a much more sort of granular understanding because we could see that data in their transactions and understand, okay, what pockets are we going to be, need to be more mindful of with respect to risk, and then use that cash flow data to figure out, okay, what can we tune in this population rather than cutting off access to individuals? Can we continue to provide them service, but adjust their limits to make sure that it's commensurate with the overall risk that we're taking on? And so that cash flow data gave us the ability to react very quickly to what we knew was going to happen, have really good visibility into our portfolio, and then make very targeted small changes rather than needing to make broad sweeping changes to make sure that we manage the overall customer experience and manage the portfolio that we have to minimize the amount of risk, but not need to just sort of go in with an axe and chop off whole bits of the sort of portfolio. Instead, really finally with the scalpel, it gave us the tools that we needed to be able to react. And so I think we had always thought that we were going to be able to manage really well. But in practice, when the time came, we realized we had this really great piece of data and this great piece of technology that we could leverage to make sure that we actually sort of managed well through that period. And then thankfully, the government sort of stepped in and ensured that, people had the money that they needed. And we found ourselves in a totally different situation where actually our customers, thankfully, were better off than they've ever been financially through the pandemic. And so that's actually where our credit building product kind of came into being. Was we realized, okay, now our customers have $1,000, $2,000 in their bank account for the first time. They don't need help with advances right now because they have a huge cash balance. What they need is they need a tool to help them save, a tool that's going to help them have a better financial foundation by building their credit score. And so that's where we started to work on some of our other products to help them make the most of those dollars that they found themselves with.
It's a story to be told because, especially COVID was tough on every single business and of course on startups as well. But, I like the way how you looked at it, right? So it's like converting what looks bad into something which might be actually useful for the customers and for the company, of course, and it turned to be out, a good decision that you've made. And, I like these stories because it teaches all of us that, of course, when we pass it, it's tough. You have, all these millions of questions in your head. Okay, what's gonna happen? Are we going to be able to continue? But at the end of the day, if you are like kind of have built this risk assessment plus, plan B mentality and being able to be flexible, so it makes the business thrive in the end, which is really inspiring, I would say, Hamel. Now, if I want to look ahead a little bit and, ask you what kind of innovation um, probably you're expecting to happen in this field. Um, you are in a very important aspect of the fintech chain, I would say, because fintech has a lot of things that we can talk about maybe for hours. But this is something that affects people's lives, right? So it's like about having the cash flow and the ability to manage their budgets. So how do you envision, the future, and especially with the advanced, technologies that we are seeing, where you are seeing things heading?
Yeah, I think we sat at a really interesting time when we started Brigit in 2017. It was a period where data was becoming available, payment processing technology was becoming available that dramatically reduced the barriers to entry. There were still definitely barriers to entry, but it reduced the barriers to entry to be able to offer financial services products. And so when we got together in 2017, we started with this one product that we knew we needed to build. And essentially, it was referred to as a period of unbundling, where people realized that they could offer services more cheaply than the traditional financial institutions. And so they went off and did that, ourselves included. And from 2017 to 2021, 2022, tons and tons of funding flew into fintech to be able to support people building these new products. And often really the key innovation here was taking these new technologies and using it to build cheaper services for customers, ultimately deliver a better, higher quality service for less than your big bank down the block. And so I think with all of that funding, a lot of people got a lot of money to build and invest in. Some of those products are still around, some of them aren't, but the ones that are still around, I think they're also learning, ourselves included, that there's huge benefits to bundling these services together now. Now that we've built them cheaper, we can get even more synergies and pass more value back to our customers by putting products together, because we'll be able to leverage sort of unified marketing costs. We'll be able to, reduce things like our cost of capital and all sorts of other things by offering multiple products together. And so that's where, we went from having one product to having two products. And, you may have seen our recent news as we are joining the Upbound group. I think it's just a testament to starting to put all of these things together, allows you to just deliver a better service to the customers by reducing costs. And so what I think we'll see is continued value being passed back to the customer. But it's really going to be in figuring out, okay, now all these disparate technologies and products that we've built, how do we put them together in a way that makes them even more efficient? So I think it's just going to be continued reduction of friction, continued decreasing of costs for customers. And that's really, I want people's finances to be something that they don't have to think about. And I think that that's really what we're trending towards. We're probably halfway on that journey, but now putting all this stuff together will allow us to put it on autopilot a bit more.
Hamel, I can see your passion, and I can see you are on a mission to help people having, a healthy, financial life, I would say, which is amazing. As we're almost coming to an end now, especially in the area where I live, I mean, in the Middle East and North Africa region, fintech is on the boom, and a lot of people I speak with, what are you going to build? They tell me we want to build a startup in the fintech, right? So, as an entrepreneur yourself, Hamel, and you've been doing this for quite some time now, if you want to advise to be CTOs in a startup, I'm focusing on the tech folks here a little bit. Um, so what kind of advice you give them if they are thinking to start in this domain?
Yeah, I think it varies so much by country. I think here in the US, it's really about the first piece of advice that I would give someone is learn as much as you can about the regulations, not just in the area that you live in, but also maybe the two areas next
Global.
door, because you're gonna spend some time sort of hovering between all these. And I think the truth is, for better or for worse, a lot of great products come out of regulatory arbitrage, out of figuring out, what you can do that maybe isn't as well defined as something that a big bank is willing to take on. And that's an opportunity for you to build a product that is maybe new and innovative because it's sort of fitting in the cracks in between different regulatory areas. And I think that may be less of the case in other places in the world, but I think here in the US, it's definitely like you will get the best bang for your buck early on. I mean, I was the CTO, but I, read cover to cover, like all of the corresponding regulations, because whatever I built was going to be constrained by that. And I really needed to understand that. Here in the US, I would say that's definitely important. It's probably also true in most other places of the world, because fundamentally financial services just has to be regulated to protect consumers. And so knowing that really well is super important. And then I think the other thing, once you get running, one of the things that we have sort of learned the hard way over the years is don't underestimate the value of redundancy. People expect their financial services to be failure proof. If you swipe a card at a store, if you have the money, that transaction should go through. It should have a 100% success rate in your mind.
Right.
If you click a button to get cash sent to your bank account, it should show up in your bank account 100% of the time. And what they don't realize is that the systems that sit under them aren't always perfect. And so the only way that we ensure sort of perfection for our customers is making sure that we have fallbacks when things fail and that we have the redundancy in place. And so it took us a long time to realize that, you have to have redundancy on your payment stack. You have to have redundancy on your data stack. You have to have redundancy kind of all across the board, because things will fail. And so you want to make sure that that happens in a way that is completely invisible to the customer, that you can correct it on the back end and that you can get it working. And I think if you don't do that, you're going to spend a lot of time dealing with those issues, and it's going to hold you back from being able to deliver on all this stuff. So the sooner that you can set up redundancy, you will 100% always need it. And so as soon as you're at the moment where the thing is working enough for that to be a concern in your mind, you should really invest in that sooner.
Great. Both advice are great, Hamel, because first of all, I believe, and I encourage everyone, whether they are going to start a company or are they going to pursue, kind of an executive role in a company, they need to understand the business side also as well. And I'm happy, like, I'm talking to more, like, because maybe, I don't know, like 10, 15 years back, I wasn't seeing, C-level people in tech, like on the business side, they were like a little bit struggling. So now we're seeing this real, what we call it, like business acumen for these executives, which is, I can see it with you, Hamel, also as well. So I'm happy with this. The second one is, I think, also very important because, to your point, and especially like I was attending a webinar before we started the recording of this episode, and we're talking about like how people are nowadays very used to have, this, you click one button and you have a delivery after 15 minutes, or like you get, so when you build like systems from a tech point of view, like, yeah, you can say, I'm gonna make it fast, I'm gonna like make it, but yeah, redundancy, I think it's very important, because you don't want people also to, try your app or website, whatever it is, and then find it like it's down, or like, for example, they are not able to access their data, and it's a big issue. So I'm happy that you brought that also, Hamel, like to this today. Finally, where people can, and this is especially for the people in the US, you might need to know where they can get in touch and also know more about Brigit.
Yeah, you can learn more about Brigit at our website, Brigit.com. You can reach out to me. I'm Hamel at Brigit.com, or connect with me on LinkedIn.
Great. Hamel, really, I enjoyed the conversation. Great insights, and the story is also very inspiring, I would say. Again, for the audience, you don't need to go search a lot. I'll make your life easy. You find the links in the show notes if you're listening on your favorite podcasting app. If you're watching, of course, on YouTube, you will find that in the description. So, Hamel, thank you again for being here with me today. And this is for the audience. If you just discovered our podcast, thank you for passing by. I hope you enjoyed. If you did so, please give us a thumb up, share it with your friends and colleagues. And if you are one of the people who keeps coming, thank you for, always sending me your comments, feedback. I appreciate every single word you write to me, and I read every single message you send. So thank you for doing so. And as I say, always, thank you for tuning in. We'll be again very soon. Thank you. Bye-bye.
Hit that subscribe button, share the show with your tech-savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.